Welcome to Morris Money, where we give you stock tips in under 5 minutes. I'm your host, Morris Willie. What's wrong? I didn't say it yet. Today, I'm talking about why you should be cautious of Lucid Motors after them announcing their second quarter results. Lucid CEO Peter Rawlinson openly acknowledged issues related to logistics and supply chain issues during the second quarter results. As a result of these issues, Lucid has slashed its vehicle production goal in half. Traders started bailing out and more share price downside may be coming. One production outlook cut might be thought of as an isolated incident. 2 consecutive quarters of vehicle production target cuts, however, may be the start of a trend. Is Lucid able to handle the macroeconomic challenges that electric vehicle makers are facing in 2022? It's a valid question, and investors have every right to be concerned about Lucid Group's ability to deliver literally and figuratively. Besides, the company's quarterly revenue miss indicates that Lucid's financial position is less than ideal. Frankly, the price action of Lucid stock in 2022 so far has been quite frustrating. After ramping up to $45 for a great start to the year, the Lucid share price has sank to $18 in May and has been stuck there since. Seeing as Lucid Group isn't a profitable company yet, it's hard to evaluate them with them having no PE ratio. Buyers might argue that EV startups should be forgiven for being unprofitable. After all, vehicle electrification is all about the future, not the present, right? Maybe. But Lucid investors can certainly expect revenue growth and ambitious vehicle targets. Well, no. The second quarter brought good news and bad news. Let's start off with the good news. It appears that Lucid Group narrowed its quarterly net earnings loss from $1.16 per share in the second quarter of 2021 to 33 cents a share in Q2 of 2022. It's definitely progress, but it would still be nice to see Lucid finally turn a profit. Then, you have the top-line results, which might disappoint Lucid Group investors. While Wall Street had braced for $145 million in Q2 revenue, Lucid's actual result was $97.3 million. Perhaps the most disappointing part of the fiscal release, however, was Lucid Group's revision to the full year 2022 production volume guidance. The company lowered this forecast to a range of 6,000 to 7,000 vehicles after having predicted full-year production of 12,000 to 14,000 vehicles in May. Rawlinson cited the extraordinary supply chain and logistic challenges we encountered in defense of Lucid Group's chopped production outlook. That's understandable, but it's still going to be difficult for Lucid to generate strong revenues in the long run when fewer cars are being produced. So the next question is, what can you, the Lucid shareholder, do? It's great to see that Lucid Group is narrowing its profitability gap. Still, the drastically reduced full-year vehicle production guidance is troublesome. Lucid's quarterly revenue miss is a bad sign as well. All in all, the negatives seem to outweigh the positive with Lucid Group now, so it's perfectly fine to avoid Lucid stock, which, me as a shareholder, I'm doing right now. I had bought some more Lucid stock around mid-July, and the price wasn't bad, but as I said earlier, the price has pretty much stayed stagnant between that $17, $18, $19 range, and unfortunately, I probably see it going lower. How low? I'm not sure, but if it seems to be attractive, if it gets down to around $16, $15, which I'd say is a slim chance, but there's a possibility, I'd buy some more Lucid stock. But I like the company for the long run. If you think back on Tesla, the company obviously had many roadblocks on its way up to being the top electric vehicle producer. But that said, Lucid Motors has a lot more challenges than Tesla. You have a lot more people in the electric vehicle space, all wanting a piece of that market. So invest with caution if you want to get into Lucid Motors. But that's just my opinion. What do you think about them cutting production numbers for this year? And do you think that they'll rebound? Or do you think rockier roads are ahead for Lucid Motors? Let me know below. Please don't take this video as financial advice, and thank you for watching Morris Money.